Okay, so this is going to be the recorded lecture. So you should have a notebook out or your notes out and writing down things, some of the nuances that I say because this is replacing the in-class lecture. I believe it's lecture 14-ish, and I'm going to talk about the semester project. The reason for this lectures to talk about sort of the business case for safety and how we're going to be using the loss run data or the workers' compensation data to assess the safety program and identify priorities and forecast future losses. And as you can see on the screen here, I'm going to be introducing a concept called return on investment or ROI. And that's something you're going to calculate because that's ultimately what you want to do to justify to management investing into the safety program. So an oversimplified equation here that every business it costs labor, materials, utilities in order to run it, and all that is meant to produce sales, whether it's sales of service, sales of product, whatever it might be. And the difference between the two is profit. If cost of business is above sales, well then that is a financial loss. The bottom two items is what we're really going to focus on, and that is the workers' compensation and other liability insurance. So you'd pay premiums, but then there's also associated unexpected losses that aren't covered by that insurance. You can get data from the accounting, the human resources department, or possibly from the insurance provider so that you can calculate this stuff. So here I'm showing a new metric which is called profit margin. And profit margin is sales minus costs divided by costs. So in essence, income minus what you're paying divided by what you're paying. That's the profit margin. It's a similar equation to the return on investment. So what you want to do is get these numbers. It'd be good if you got production numbers, sales numbers, costs of insurance, and the claims as well, which is called the loss run, in order to determine how the company is doing. And I have here on the bottom, you can also use things like sick leave, turnover, the cost of hiring and training, costs associated with the safety program, whatever that may be, and also additional costs associated with it, with accidents. We call those indirects, but they can be measured. So let's look at the return on investment. So ROI is equal to the benefit minus the investment divided by the investment. For the project, the term benefit is actually going to be the estimated loss, because if we can prevent the loss from occurring, that is the benefit we're shooting for. We then can ask for money from management to make those corrections to prevent that for what's happening, and that's return on investment. It'll become more obvious when we get into the project, but again, the benefit is the estimated loss. The investment is what we want to get from management. I have an example that I threw together. So let's say you do your calculations and you trend and show that next year, or on average, there's going to be 6 low back injuries. And the records show that the average medical cost is about $2,500, the average indemnity is about $7,500, and that's averaged over 5 years. The total annual cost will then be 6 times 10,000 or $60,000. That's in medical and indemnity. Let's say that there's an estimated investment in adjustable work surfaces to eliminate the awkward postures which were leading to the low back injuries, and that investment costs about $45,000. Well, the return on investment for that requested $45,000 would be $60,000 minus 45 divided by 45, or 0.3 times 100%, or a 30% return on investment in the first year. Again, you identify the time frame by which you estimate the return on investment. So if it was a 3-year loss, then the investment you considered over 3 years instead of 1 year. And that's something that you're going to have to determine based on the data that you have and how accurate you can be in that estimation. On the bottom, I turned it into how long it would take to get back. It's something that sometimes people present, but for the most part, the return on investment and dictating whether it's a year, 2 years, 3 years, 5 years return on investment, that's more important. When we estimate medical and indemnity payments and what the future payments are going to be, and if our company is paying for a work comp policy, there's actually an overhead built into it. So this is, just the dollars that are paid for the medical treatment, that each dollar paid for lost time or to get the person whole. But what we're not counting is the overhead that the insurance company keeps. You know what their profit, their profit from within, and that's at minimum usually 30%. And so just realize that there's going to be some delay in how much these things cost, and there's going to be a delay on when we recover it. But for now, we're just kind of assuming that the company's paying for it, even though most companies operate under a work comp premium or sorry, a work comp policy. So it's a shared risk with the policy holder or the policy carrier. Long-term savings, again, I said that comes from prevention of injuries, and we should be able to estimate these things based on what the company has set up. And not all losses represent money. And, yeah, we can get into that later. So here is a simple ledger, and this is something you're going to have to do in your in your capstone internships when you do your case studies. You do a cost benefit, and we'll be giving you different techniques to use when you're out there, but you'd want to do something as you see on the screen here. So we have a 1 year period of what is being requested, so that's the expenditure, that's the investment, where the improvements are what you're going to prevent, that's the benefit itself, and you can see the return on investment is down below. And so I just try to give you an estimation. So we want you to get into developing ledgers like you see on the screen. And it doesn't have to be limited to, the improvements don't have to be limited to injuries. It could also, saving equipment from breaking or increasing productivity. There are a lot of things that can be a financial benefit as long as you can measure it. Now, what we're going to be doing in order to come up with these estimations, because as you had noted a few slides ago, I said average, annual average. A more accurate depiction is scatter plotting, or scatter plot is a type of graph in which you have got the x and y axes. The x-axis tends to be time, and then the y is the variable you're interested in. So maybe the work comp paid or work comp medical, and maybe you're just plotting for one particular job title or one particular cause within a department. And then you can see whether those costs are going up, down, or the frequency of claims is going up or down. And then if it is going down, fantastic, things seem to be going pretty good. But if it's consistent or level or going up, that means we didn't do our job, or whoever was in charge of it isn't doing their job, because those things are continuing to happen, or continuing to happen either at a greater frequency or at a greater cost per claim. And so all these things, being able to trend, being able to forecast, will allow us to come up with a pseudo future loss that, if we can prevent it, becomes a benefit for the company in our return on investment calculation. So here's the justification for the technique that I'm going to teach you. As safety professionals, our duty is when an accident occurs to make sure that those injured parties are taken care of, but we want to invest, we're required to investigate. I mean, OSHA requires it for their record keeping, work comp requires it as well for their records. We're supposed to identify the causal agents and then come up with solutions and recommend those to management. Now, it may, if we just institute it and off it goes, it's like, hey, I did my job, no problem. However, if you actually look at the data over the years or look at it in entirety, trends can form as far as, are they going down, are they staying consistent, or are they going up? And we do both a frequency and a severity. For work comp, the severity is dollar value, so it's much more applicable to what we want to be able to do. So if we're doing our job, if when someone gets hurt, we're trying to prevent it, but when someone gets hurt and they file a claim, if we investigate it, we actually identify what the cause was and control it, there should be no future occurrences in that similar job department and by that similar cause. But if over time we're finding that if we graph the frequency of claims and the severity of claims, so the cost of claims, and those things are going up or staying steady, then there's something wrong. And therefore, what we need to do is we need to determine, we want to sort the data set down to a job title or a task, or and especially a cause within a job or a task, because that's going to tell us where and what to look for, where and what to prioritize, especially then when we trend that data. We can show what the future losses can be. That becomes the basis for the benefit, and then we can ask for a certain level of money in order to achieve a return on investment. I just want to put on one last thing, and that is the more reliable data we have, the better we can formulate an understanding, and that goes back to quality management theory. that the more data we have, the more accurate data we have, the better we can truly understand not only the status of things, but the trends of things and how it's changed over time. That gives us an astute perspective on what needs to be done in the work environment. So here are the steps. This is really boiled down into simple terms, and this is what I'm going to show you in the video series that's coming up after this. That is, the first thing I want you to do is ask the question, how's the data? I want you to look at all the variables on the top. Different work comp providers collect different variables, and they use different taxonomy, different vocabulary for different things. And so you want to get used to that. The first thing we're going to do is we're going to get totals. We're going to figure out the totals of things, all things considered, given what we have. I'm sorry that keeps coming up. I don't really know what that is. Let's keep closing it. Then what we're going to do is once we've considered the totals, we're going to look for outliers. And so we're going to graph the data by the most expensive claims and look for a clean break. And then we're going to remove those most expensive claims because that's going to drive up all of our averages and therefore may give us a false priority. Then we're going to see how the company's doing. We're going to plot frequency and severity over time, just to give us an overall, and there's going to be issues within the overall. And then we're going to try to figure out where to focus. So depending on what the data set gives us for job titles or departments or I don't know what, it can be broken down by cities sometimes. I don't know. But we need to be able to focus. I need to go, here's all the safety programs doing, but you know what? This right here is accounting for the greatest, frequency or the greatest severity, paid, and we need to investigate it. We need to find out what's going on there. And when it's plotted over time, we can really determine whether it's going up, down, or otherwise. After that, we're going to figure out what are the causes. We're going to do it overall, and then we're probably going to have to reclassify because sometimes companies get a little bit too creative with their causes, and so there'll be very similar cause categories given. And if we combine those, what it really comes down to is if you're going to analyze a job and there's a slip and fall same level or trip and fall same level, are we going to be using the same approach to analyze that job to find out how to prevent the person from slipping or tripping? Probably. Therefore, we can combine them. And so what you're going to find is that the reason we had talked about the Bureau of Labor Statistics report, especially the Survey of Occupational Injury and Illness, is that we can borrow some of those categories and implement them in. So either musculoskeletal disorder cause or overexertion can be one that we put things into. And it's nice to do that because then it gives us a little bit more strength to trend and forecast. So once we've prioritized where we're going to be looking and what we're going to be looking at, we can now forecast that and come up with a return on investment for management. So here's a little bit about the trending. Now, the problem is if we try to forecast and the dots don't come close to the line, we call it a best fit line. If they don't come close to the line, then that's not a very accurate trend. And so therefore what we do is we default to the average. And we can do that two different ways. We can go by the annual average, or we can calculate the average number of claims, multiply that by the average cost per claim. And that should help. And then, we'll use that to estimate future losses, whether it's next year's or the next 3 years, whatever it is, depending on what our time context is. And then we'll calculate the return on investment and make the recommendation to management. I think we should invest X number of dollars to investigate this issue and come up with a solution. And if we do that, I can show you this return on investment. Presenting the findings is another trick. I'm going to go through this pretty quickly, but remember, who is our audience? It's management. And so therefore we need to put everything in context. We're going to be asking for money, and so we want to show that the money that we're requesting is going to be used properly, and we're going to show them a return on that investment. The key to that is that the data is going to show that the way the company has been handling the accident investigations has not resulted in controlling the exposures. That we have a consistent frequency or consistent or increase in costs. Therefore, we're recommending additional funds in order to really study where we're prioritizing and what we're prioritizing. And by doing an in-depth study, a systems approach to things, we think that we can uncover what the true causes are, make recommendations, and we can actually, well, the company will save money based on the constriction of we estimate the loss, that's the maximum benefit, and that then therefore we can show return on investment hopefully within the first year. In the real world, what you'll be able to do is actually come up with the actual cost of the solutions and do a real true return on investment. But because this is a course and we don't have the ability to go out and actually functionally evaluate loss run data and analyze a job and find out what's wrong and find out what the solutions are and then do the return on investment, I'm just trying to teach you the data part of it. So again, all we're going to be doing is recommending to study. So the project itself, here is the current, it's 25% of your grade. The breakdown is 60% goes towards the paper, and then the remainder is split between your Excel results and your presentation, the one-on-one presentation. The data set is put on D2L right under the assignment, which looks similar to this, but is a Word document. And that's what you're going to be working on. In the series of videos, I'm going to be working on a different data set. It may look similar in many ways, but it's different. So what you're going to need to do is observe the videos, take notes, and then look at your own data set and do something similar to it. You're not going to be able to basically just copy exactly what I do on the video, but take it and extrapolate it to your own work. And each step should be pretty well noted, and you may find some nuances that require a different form of interpretation, but that's what you're going to have to do. So what I really want you to do is to be taking notes while you're watching my video series and to think more about what's going on versus what you're typing in. In past years, the students just want to go and type in exactly what I type in and hope they get this right answer. That's not the way to do it. I want you to conceptualize what I'm trying to figure out in each step of the process and then apply that logic to your data set. That's what I really want you to do. As I show you in red here, each spreadsheet tab rather in Excel is designated to answer one particular question. Therefore, what I want you to do is provide a data table and or figures, so that's graphing the data, and then I want you to write up what you found and what it means. If you don't have that, you're going to lose points on the Excel part, and if you do it, it just makes your paper writing and your presentation development that much easier. So that's what you should be doing, and actually what you find should be dictating your next step. So for the paper itself, I want you to plan what you're going to be doing, and that should be part of your submission, that you're submitting your plan of how you're writing it. Please don't write in first person. Try to keep it objective. Try to write in more of a active voice versus the passive, and I gave you an example here on the screen that a passive voice would say the entrance exam was failed by over 1/3 of the applicants to the school. An active voice would say over 1/3 of the applicants to the school failed the entrance exam. It's a matter of where you put the subject and the action versus trailing it at the end. And then below I've got a little bit of a recommendation that you're going to write a short introduction, a short methods, a full results, justified recommendations and state some limitations in your approach, and then finally write the executive summary, but then that goes first. That goes ahead of the introduction right behind the cover page. Other expectations is please use the Writing Center. That's what they're there for. Do not turn in your first draft. You should be reading it aloud before you submit it. There should be no spelling, no grammar issues if you go through the editing process as you should. And I do recommend you spend the majority of your time on the technical report and the executive summary because that is 60% of the 25% of the total project grade. 25% of your semester grade, it's 60% of that, if that helps clarify. For the presentation, that's where you're going to sign up for a 10-minute time with me up in a conference room, and you're going to have 5 minutes to present. I may ask some questions as a follow-up. Prepare yourself, practice, don't read off the screen. You only have 5 minutes, so really you only get like 6 slides. really, because you're going to be putting up a slide with a graph on it or a table, and you're going to be talking about it. And so it's an intense 5 minutes, but by the end, you should tell me what you found and how much money you're asking for and what you plan to do with it. That's what it's all about. Keep the presentation positive. Don't blame. That goes for the paper as well. So tips for the presentation, and I've got some, I've got a pie chart and I've got a bar chart which actually share the same exact data. What I want you to do is look at which one helps you decide what's most important. Sure, you can look at the pie pieces, but it's difficult to figure out what they are, whereas the bar chart I think on the right is a better representation because from the bar chart I can see that departments 3, 4, and 6 have the greatest percent of total claims. And whereas with the pie chart I'd have to kind of look at the sizes and the numbers and then therefore I'd estimate that it was something. Okay? Here's a table. See, I've got the department name, the frequency of claims, the total claims paid, and the 3-year budget for it. But then you can add in something like what you just see here. Something moves to point to what I want to talk about. It's something you can do for your presentation. And here's just another way to present a table. And then here is a bar chart. It's got a lot of information, but if I want to really key on something, I can add a graphic like what I just showed there. Draws the listener's eyes to it and just to focus on things. So I want you to experiment with different formats of tables and figures and using some of the techniques within PowerPoint to draw the listener's attention to it. So that is the full presentation for this lecture. The last thing I want to call to your attention is the actual assignment itself, and I kind of went over the specifics of it. So I've got all the due dates on here. The Excel is due to D12 Dropbox the morning of the 15th. That's when the presentations start. The presentations should be there as well. You should submit your presentation to D12 well before your presentation so I can have it prepared and ready for you in the conference room, which is Highland Hall 4301. The papers are due Thursday evening, so everybody will have given their presentation. I will provide some feedback, and then you can go in and make some minor edits before you submit it if there's any issue. If not, then you could just submit it right away. But I want you to actually start working on the paper as soon as you start the data analysis. As soon as you start figuring some things out, you could start working on the paper right away. Here's, there really is no page limit. I'd like you to keep it under 10 pages if you can, but a cover page, so state, your name, that this is the loss run data analysis. The executive summary is going to be after the cover page. It's going to have its own page. That's what you write last once you've completed the whole report. Then you have a short introduction, short methods section. Make sure you have the headings there. A full results section. So I want to know start to finish from the question of, what did the data represent? What was the quality of the data, all the way up to what you're asking for investment and what's the return on that investment. And then talk a little bit about the limitations. There are always issues in every approach we take, and I want to see what you think. And then if you do reference anything, especially in the introduction, if you want to provide some support for the technique, you can put that there. And then the appendices can be put there if you want to provide any additional supported materials, because you don't want to share all the tables, all the graphs you created in Excel, but maybe at that point you'd like to put a couple back there that whoever's reading could refer to. So the presentations will be signing up for your time. They'll be offered on the I think it's the 15th and the 17th of November. And this is kind of a simple breakdown of how much time I would spend on the different sections, but it goes really fast. So really 6-7 slides, and you really need to practice it because that time goes really quick. And then I've got all the grading rubrics for the paper and for the presentation and for the MS Excel document. So that concludes the lecture. And so contact me if you have any questions. But now what I'd like you to do is look over the documents that are posted on D2L, and there'll be a series of links to YouTube for the videos that go through the actual the actual technique that you're going to take notes on and apply to your own data set, because I'll be using one that's different. You'll have to extrapolate to your data set. That's it.